Okay. So chapter 2, Introduction to Financial Statements. I think I told you creating financial statements is really what this whole course is about, right? It's about taking data, financial transactions, organizing the data, and then turning that into financial statements that you can share with people both inside and outside the organization, right? So we're going to learn about some of these financial statements, like the statement of cash flows, the income statement, the statement of owner's equity, sometimes called the statement of stockholders' equity, and the balance sheet. So those are already 4 financial statements that we are going to be introduced to this chapter. And there's really only one other financial statement that we'll be learning about this semester, which is the statement of retained earnings. So we're getting off to a fast start. We're already getting exposed to 4 out of the 5 financial statements. We'll learn some new terminology. In accounting, we often use words that are similar to words we use in day-to-day life, but they have a different meaning. So we'll learn what current means in terms of accounting. We'll learn about liabilities. Who can tell me what is a different word for a liability? Debt. Exactly. A liability is a fancy word for debt.
Would be something like it loses value? Like
No.
a car?
Like a car?
When you drive it off the car, now it's a liability because it loses value?
Yeah, in accounting, we wouldn't say that.
Oh, okay.
Yeah, in accounting, a liability is specifically a debt. You can have legal liabilities or financial liabilities where you're responsible for something, but the way we use that word in accounting, again, it's kind of like a different language, specifically just means debt. Equity. Equity in general means basically fairness or giving people what they need. Who can tell me, what does equity mean in accounting? Sorry.
Like we have leftover after you
Okay. Sure. It's what the organization has left over after they liquidate. Well, after they pay off their debts would be a better way to say it. It's basically what the owners own. The value that the owners own is what we mean by equity. And revenue. What's another word for revenue?
money generated?
Yeah, it's the money that a company earned from selling its product or service. Okay. And expenses, I think you pretty much know that word because that's the same as what we say in our day-to-day lives. It's costs, right? Things that cost us money. So those are some of the terms we will be working with and getting used to today. All right. And let's see. It's necessary to distinguish the business entity from the individual owner. Let's say you start a business, okay? And when you took Intro to Business, you probably learned the concept of a sole proprietorship. How many owners are there in a sole proprietorship? 1. So sole proprietorship has 1 owner. Maybe in some cases it's a married couple, so you could say that's 2 people, but that's it. No other owners in sole proprietorship. So let's say I did that. I decided I wanted to start knitting sweaters and selling them on Etsy. I don't know why that example came into my head, but if that were my business I was starting, it would just automatically be a sole proprietorship unless I decided to form a partnership, a corporation, or some other form of business. Okay? But if I just start a business and I don't go through any process of creating a separate legal entity, then the business is just called a sole proprietorship. I mean, I can name it whatever I want, but the type of business would be a sole proprietorship. And what that means is any profits I make from the business, I have to pay the taxes as part of my personal tax filing. So like it says here, with a sole proprietorship, there's one owner, and that owner pays the taxes on the profits of the business. Let's say that instead, I decided to start a partnership, a legal partnership where I and one or more other people have formed a business together, and we structured it legally as a partnership. So there's a partnership agreement. We've decided how we're going to split up the profits. We've decided who's going to put what into the business. In that case, where there's a partnership that's been formed, a legal partnership, okay? I'm not talking about just a loose description of these people as my partners. I'm talking about a specific legal entity called a partnership. If I have formed that, then each of the partners is going to have to pay taxes on their share of the profits. So if we make $100,000 and 50% of it goes to me, I pay taxes on that $50,000. And if the other 50,000 goes to my partner, they pay taxes on their 50,000. Okay. Now let's say that instead I formed a corporation. A corporation is a separate legal entity. I talked about them last week. Talked about how corporations are like individuals in many respects. And under the law, a corporation is considered a legal person with many of the same rights. A corporation can own property, it can hire and fire people, it can enter into contracts, it can have debts. So in many ways, corporations have the same rights as individuals. What would be a reason that I would set up a corporation instead of a partnership or sole proprietorship? There are two primary reasons. What might they be? Yes, I limit my liability. If somebody decides to sue the business, I'm personally not responsible for paying for that lawsuit. The company pays for that, right? The company hires lawyers, the company pays the damages if we end up losing the suit, and I personally am not responsible. Okay? Now, that doesn't mean they couldn't also sue me personally, but that would be a separate issue. The judge might not allow that. The judge might say, sorry, you can only sue the corporation. You can't sue Trav because he's just an owner of the corporation. He's not the actual corporation. So you're exactly right, a limited liability. I saw your hand go up. Were you gonna say same thing? Okay. What would be the other reason you might form a corporation? Main reason. Well, so, okay, taxes, possibly. There can be benefits. There is a downside to corporations. They get double taxation, which means that the corporation has to pay taxes on its profits. And then when it shares those profits with the investors also have to pay taxes on the part they got. So that's kind of a downside to corporations. In some cases, it might be advantageous from a tax perspective, but there's a better reason to form a corporation. Who remembers from intro to business?
Easier to raise capital.
That's it, easier to raise capital. If you want to get people to invest in your business, they're not going to buy stock in a sole proprietorship because sole proprietorships can't sell stock. Partnerships cannot sell stock. They could bring in more partners, but do you really want every investor to be a partner in the firm? Maybe not. So if you want to be able to get investors to just give you money that you can then use to grow your company, and you never have to give that money back to them, the way you do that is you incorporate and you sell stock. You can only do that as a corporation. Okay. So hopefully that's a helpful review of the three primary business structures, how they're taxed, and what are some of the pros and cons. Okay, what questions do you have?
What are the requirements for a business to like become a corporation?
Okay, so to become a corporation, you have to pick a state that you will incorporate through. And it's up to you. It doesn't have to be the state where you're located. It could be any of the 50 US states. They each have different laws on corporations. So some are more friendly to the corporation, some are more friendly to consumers or to employees. So it really just depends. You pick a state, you apply to become a corporation. You have to provide what are called articles of incorporation, which really give the details of the corporation and who's going to be on the board of directors and things like that. Once you're approved by the state to be a corporation, you have to pay filing fees. You have to submit your financial statements typically every 3 months. There's a lot that goes into it. So there is some initial startup costs. There are some ongoing requirements you have to meet. Your board of directors has to meet at least once a quarter. So it's a lot more challenging than just starting a sole proprietorship. But if you want to raise investor capital, that's what you have to do. Good question. Anything else? Good. So let's see. All businesses, regardless of their legal structure, generate financial statements. So even if I have my business on Etsy knitting sweaters, it's a good idea for me to track my business transactions, God bless you, in a program like QuickBooks or some other program designed for tracking your accounting records. Because then I can see how much I sold, what my costs were, and how much profit I made, right? And I need to know how much profit I made because, again, I have to pay taxes on it. But if you're a partnership or any other form of business, you still want to be able to produce financial statements. We, I think, talked about this a little bit last week, maybe not. Who cares about these financial statements? Who do they benefit? What's that?
Oh,
Government?
Okay, so yeah, the IRS wants to see our financial statements to see how much we made. Investors, exactly. Stakeholder, all the different stakeholder groups. We talked about that word a little bit last week, didn't we? Stakeholder, okay. The Securities and Exchange Commission, if we're a corporation, they're going to want to see our financial statements. As it says here, creditors, if we're trying to borrow money, the bank or lender is going to want to see our financial statements. We mentioned a couple regulators like the IRS and the SEC, which is SEC's Securities and Exchange Commission. And employees might even be interested in seeing financial statements, and others as well. Okay? So we produce these financial statements for our benefit, for the benefit of internal stakeholders like employees and external stakeholders outside the company. Right? Any questions on that? Oh, and then as it says here, these financial statements help people make financial decisions. Like, do I want to invest in this company? Do I want to lend money to this company? Right? That's why they need it. So this illustrates how accounting is like baking a cake. We take the financial transactions, every sale, every purchase, every paycheck, all of that information is like the ingredients in the cake. The accounting department has to make sure we've gathered all the information, we've processed it kind of like following the recipe. And then the output, instead of a cake, is a financial statement. Okay, just a simple metaphor of how accounting works. And here we see our first financial statement. I'm going to pause here and switch over to that video I told you about. I'm going to stop the recording. Right here. Okay. All right. The income statement. This is one of the 5 financial statements you will be learning to create this semester. It's typically the first one you would make because it tells you how profitable the company was. And you need that information to make some of the other financial statements. So there is an accounting stuff video for this. So if you, well, you can find it on the accounting stuff page, or if you download this PowerPoint, you can click on the link and watch a video with James explaining exactly the income statement. But I think it's easier if we just talk through it here in class. Now, the income statement, the format is pretty simple. It's based on a formula that's also simple. Revenue, which we already discussed as the money that we earned from selling our product or service, minus expenses equals what's called our net income. So let's drill down a little bit into that. As you see, this is an income statement for a particular company, and it's for a particular month. Income statements and most financial statements cover a period of time. So they could cover a month, a quarter, which would be 3 months. They could cover a year. So some period of time, okay? But usually it's sometime between a month and a year. In this case, it's just 1 month. So that tells us how much revenue the company earned in that month, what their expenses were that month, and then the difference, their profit. In this case, we see the total revenue came out to $1,400 and total expenses were $1,150. What would happen if the expenses were greater than the revenue? You would have a loss, correct? So we don't really use the word profit very much in accounting. We usually talk about either a net income, which means you made money, or a net loss, meaning you lost money. Okay? That word net, the easiest way to think of that word net in accounting means after adjustments. So you could say that our income was $1,400 because that's how much we earned by selling our product and service. But our net income after we've adjusted it by taking out expenses is $250. Okay? Net income is a fancy word for profit. Now, this is a very simple income statement. They can get more detailed, but they all follow the same basic formula. Start with the revenue, subtract the expenses, and what's left over is your net income or net loss. Are there any questions on the income statement? Yes. Well, here we have an exercise. And what we do whenever we come across an exercise or a problem in class during a lecture, we go ahead and solve it. And I have found that this way you're not just listening to me and seeing me solve exercises or problems, but you're actually doing it yourself. And I found it to be an effective way. So right now, let me walk you through how we're going to use the template for the exercise set, because it will come in real handy as we're working on this exercise. I'll walk you through how we're going to do it. And once I've explained it, then I'll have you break up into groups and actually work through the exercise together and see what answer you come up with, okay? So let me just swivel this around for a moment. And I'll come back over here. So what you're going to want to do, actually, there are a couple different ways you can get the template. One way, move this out of the way. One way, if in Canvas, you just go to Files, and then you go down to Exercise Set Templates. The second one, no, the first one is for Chapter 2. So you can just download that, and you would have the exercise set template. Another way you can get there would require what I was talking about earlier. You have to start at the beginning of the chapter module. If it's your first time going into the chapter module, you have to click on the first link and go page by page to unlock all the other pages until you get to ES2. When you open ES2, it'll look something like that. And it has an arrow. You click on that arrow, it'll download the template for you. Okay. I think I already have it open. Yeah. So when you download the template, if you open it in Word, it'll look like this. If you upload it into Google Docs, it will be a little different, but basically the same. Or any other program that you can open it with. Now, going back to our chapter here, it says this is exercise 9, right? EA9. E stands for exercise. A is because in the textbook, there's an exercise set A and an exercise set B, but we just always do A. So it's always going to be EA and then a number. And in this case, it's number 9. So if we go to the template and we just scroll down till we get to EA9, this is the exercise we're going to work on now. Okay? You don't have a laptop or for whatever reason, can't get there. I can help if it's a technical issue, but otherwise just take some really good notes, okay? So I will stop recording for a moment. All right, well, we talked about net income already, right? What is net income? Revenue minus expenses. It's the profit of the company, right? And this looks complicated on the bottom, this green box here. It looks complicated, but all it's saying is that you take your revenues and subtract your expenses. And if the revenues were greater than the expenses, you have net income. If the expenses are greater than the revenues, you have a net loss. Same thing I already told you, just written out as a formula. You might notice here the term operating profit. Sometimes you'll see that operating income, operating profit. But normally we use net income and net loss. Okay? Later in the semester, you might see some variations, but they mean basically the same thing. Okay. Oh, now we have our first problem. So I would recommend go ahead and open up the problem set. You can do that from files, or you could do that from the chapter 2 module, and we'll work on problem number 1. Okay, so let's think of a coffee shop. We're all familiar with the Starbucks here in the student center, correct? So what are some things that are sold over there at Starbucks that would help generate revenue? What do they sell at Starbucks? Coffee, yes. What else? Pastries? What else? Coffee what?
Beans.
Coffee beans, okay.
Coffee cups.
Yeah, coffee cups. So they have quite a few different products that they sell, right? To generate revenue. Yeah, okay. How about, darn it, I thought this thing. It works, and then I step away and it stops working. Okay. God bless you. How about expenses? What expenses do they have over there? Okay, they have to pay for labor for their employees. What else? Materials. What are some of the materials that they might use? Cups, straws, coffee, syrups. What was that? The espresso machine. Okay, so that's some equipment. Technically, equipment is it's a capital expense. So that's true. What else? Utilities. Who said that? Yeah. Christopher, right? Yeah. Exactly. Things like electricity. And I don't know if they use any natural gas over there, water, internet. Maya.
Okay, so when you become an accountant and you do it for a company, do they already have that listed for you, or do you have to go in and like find specific like utilities and all of that, like as an accountant?
Yeah, so every company has a list of accounts, a chart of accounts, where they have all their different accounts listed with the name of the account and the account number. If it's a brand new company and you're coming in to help them set up their accounting, you would establish that. But otherwise, it's already set up. Okay, good question. So insurance is another thing that comes to mind. So companies usually have just a few types of revenue and many types of expenses. So that's something to keep in mind as you go into business someday. I read that a lot of you have thought about starting your own business from your introductions. So if you do that someday, or maybe you already have, you learn that there are a lot of expenses in business. If you have enough revenue coming in to cover all those expenses, great. But sometimes that's the challenge. Okay, so what do we have now? We already talked about gains and losses. Let's see. Here is remember the formula we were just looking at in those two columns? We had revenue minus expenses plus gains minus losses. So here they changed the order a little bit, but it's the same thing. So it's not really just revenue minus expenses that tells you your net income. If you sold any other assets, then you have to include any gains or losses from the sale of assets, right? So this would be the full formula: revenue plus gains minus expenses minus losses. I think that's all we need to cover here. Yeah. Here is the same thing written out. And again, basically what it says, if your revenue and your gains are greater than your expenses or losses, you have a net income. If your expenses and losses are greater than your revenue and gains, then you have a net loss. Oh, now another exercise. So I'll pause the recording once again. Oh, this one's fun. Not really. Okay, how many people know how to solve for x? Might have learned that in algebra. Okay. It's been probably 40 years since I took algebra. you might have learned a different way to solve for X. If you have any shortcuts or tips for me, let me know. I'm going to teach you all, in case you don't already know, how to solve for X, because that's what we're going to do in exercise 1 and some of the other exercises too. This, and I don't know why we do this already in chapter 2. This is probably the hardest math in the whole semester that we're going to do today. Okay? So don't worry if this freaks you out, don't worry, it gets better. You know, it's not going to get any worse in terms of the mathematics itself. So what we have here in exercise 1 is that same formula. Revenue minus expenses, right? You see that up at the top? Plus gains minus losses equals our net income or net loss. And we've got 5 rows. They're not numbered, but we can see this is the first row. And there's a number missing. We're going to have to figure out what is this number. Now, this first one is actually super easy, right? Because all we have to do is start at the left with the revenues. Let's see if I can fit this in a little better. Okay, right? If I start over here at revenues, 1,250 minus the expenses plus the gains, and then minus the losses. I just went straight across, did the calculations, and it comes out to $200. So that was actually easy. We didn't even have to solve for X. We just had to do the calculations, right? The next one is not so easy though, because we're missing this first number. So we're going to call that X because we don't know what it is. And I'm going to rewrite the formula down here so that we can then work with it and figure out what X is, okay? So I'm going to say that the revenue X, whoops, minus the expenses, right? Because we have the minus sign, and then expenses are 100,755. Right? Everybody see that?
Yes.
Then plus gains of 0. And then minus losses of 1,550. So I'm just really rewriting this formula down here. Now the last part says equals. And then notice it equals $485 in parentheses. In accounting, parentheses is one way to show a negative number. Okay? I'm just going to write it as negative 485, like that. So again, all I've done is I've rewritten that formula down below. One second. Oh, why doesn't it let me go full page here? Okay. All right, that's all right. It's good enough. Is that too small for anybody? All right, so we rewrote that row. Now, how do we solve for X? So the way I do it, okay, this is a little tricky, so I need everyone to pay attention here. Let me get everybody's attention. Okay. Somebody, I don't know who's talking, somebody's talking. Let me get everybody's attention. So what we need to do is we need to get rid of all of these numbers here, except for X, and then we'll know what X is, okay? Now, the way we do that, see how we have a minus sign and then 100,755, right? If we add 100,755, and we already have minus 100,755, that washes it out and it becomes 0. Okay, so in other words, we're going to add 100,755 to the left side, and that gets rid of it. But in order to do that, we need to also add the same amount on the other side of the equal sign. So over here, I also have to add 100,755. Okay, that's the process. The next number we need to get rid of is this 0. Well, 0 is 0, right? So we actually don't even need to get rid of it. There's nothing we need to do because it's a 0. This one, however, to get rid of negative 1,550, we need to add 1,550. But again, we have to do that on both sides of the equal sign. So I'm going to take it away from here, and I'm going to add it over here. Okay, so we've just shifted those extra numbers from the left side of the equal sign, and we got rid of them over there, but we had to do the same thing on the right side by adding them on the right side. We're going to see a couple examples of that, so if this is not sinking in yet, don't worry. Any questions so far? Okay. Now that we've done that, if we calculate the right side, that will tell us what x is. And since it starts with a negative number, I'm going to clear out the calculator first. I'm going to put negative 485 plus 100,755 plus 1,550. And that tells us that x is equal to, in this case, 101,820. That is our answer. And we fill it in. Okay, again, the hardest math of the whole semester. Yes, sir.
I don't know if it's right, but I got the same answer, but I think we need a little bit more easier.
Okay, why don't you, if you want to see me during the break or after class, show me how you do it, and maybe I'll switch. I don't want to get into it right now because that might cause more confusion.
Yeah.
But let's talk. Okay, let's go on to the third line. All right, so the third line is this one right here. Again, we've got a missing number in there, so we're going to have to solve for x to figure out what that number is. So I'm just going to rewrite the line down here. I'll say 75,560 minus the expenses of 68,600 plus x, because we don't know what the gains are, minus the losses, 1,675 equals 6,485. Okay, so I rewrote the middle line, the middle row. How do I get rid of 75,560 on the left?
Yeah, to the right.
Well, in this case,
Well,
it's a positive number, so I have to subtract, right? So because this is a positive number, I have to subtract that amount to get rid of it, which means I have to subtract the same amount on the right side. Okay, then we have a negative number. How do I get rid of that? We have to add that same amount. Exactly. So we're going to add 68,600 to the left to get rid of it. And we're going to add that to the right. Okay, x is what we want to know the answer to. So we're just going to leave that there. And now we'll get rid of this negative 1,675. What do we do with that? We have to add that amount. Exactly. That gets rid of it on the left, and we add that amount on the right. Now we can do our calculation on the right side, and we'll know what x is. Okay, so when I do that calculation on the right side of the equal sign, we come up with 1,200. So that is what X is. Now, as a rule of thumb in accounting, it's always a good idea to double check your numbers. If we wanted to double check it, we could just pull up our calculator, start on the left, and say 75,560 minus the expenses, plus the gains that we just calculated, minus the losses, equals 6,485. So it came out right, right? So you can always double check your work and see if you got it right. So, oh, it looks like it might be time right now. It is. We're a minute over. So let's go ahead and take our 10-minute break, come back at 2:51, okay? And we'll continue with the exercise set.